Hey guys, welcome back to Stacking Stocks, and many thanks for joining us today. If you're tuning in for the first time, remember to hit the notification bell for updates and subscribe to get more of our videos if you enjoy this session. Today we're going to talk about NIO, so let's get started. We all know that NIO is a pioneer and a leading manufacturer of premium smart electric vehicles. The company develops, manufactures, and sells premium smart electric vehicles while striving for innovations in autonomous driving, digital technologies, and electric powertrains and batteries. But how is it any different from the other EV making companies? What are the differentials? What differentiates NIO from its industry peers are its continuous technological breakthroughs and innovations, such as the company's industry-leading battery swapping technologies, battery as a service or BaaS, as well as its proprietary autonomous driving technologies and autonomous driving as a service or ADAS. The electric vehicle making industry is flooded with many top firms trying to dominate the EV arena. How is NIO performing in this space? What about NIO stock? NIO shares have undergone a massive rally over the past couple of years. The stock was trading as low as $1.19 in late 2019 before skyrocketing to near $67 in early 2021. The stock has consolidated its gains since trading relatively flat year to date. Still, over the past month, NIO has again gained around 18% as investors have been likely getting increasingly excited over the company's upcoming earnings report. But is the hype based on real potential going forward? Well, Chinese EV sales have been snowballing, and NIO is certainly benefiting, as seen by its explosive sales growth. Let's analyze the stock's development over a period of time. While NIO's monthly vehicle sales took a hit in the first half of 2020 following the COVID-19 outbreak, the company didn't just quickly recover but returned to breaching new records by the quarter. In the first half of 2021, NIO has been ramping up production, with sales multiplying versus the same comparable months last year. The company is often compared with Tesla, which, by the way, is a direct competitor of NIO since it offers premium 100% electric vehicles. The company's ET7 vehicle, for instance, will have a starting price of around $70,000, clearly targeting the high-end consumer target group. With sales expanding rapidly, NIO's proof of concept is clearly successful. In fact, sales would likely have been more impressive if it weren't for the ongoing supply chain issues, which have limited worldwide deliveries of all vehicles. Still, NIO forecasts to reach a capacity of 150,000 vehicles produced during a single shift and 300,000 units on a double shift. Additionally, the company speaks of aggressive capacity expansion plans, striving to get to 600,000 units a year by the end of 2022. Well, earlier this month, the company warned of a 27.5% plunge in its October deliveries relative to cars delivered in October 2020. That certainly sounds ominous, but on the other hand, NIO also said that it's continuing to expand its ability to produce new cars, aiming for an annual capacity of 240,000 electric vehicles. Clearly, this should result in massive sales growth, which investors expect to translate to a 67% increase year over year in fiscal year 2022, following estimated growth of 125% in fiscal year 2021. At the stock's current price levels, NIO is trading with a forward PS of around 12.2, which is not crazy for such a rapidly growing company in an exciting market space. Still, investors need to be wary of the various risks attached to Chinese companies and future regulations, which we've seen crippling some companies from time to time. Examples include Chinese education companies that tanked earlier this year. For this reason, while the current multiple could be enticing based on NIO's growth prospects, the discount is likely quite well justified. The upcoming earnings report should shed more light on NIO's future growth prospects, likely minimizing some of the ongoing speculations. However, until we accumulate more data over time, the stock remains a rather risky bet. That's in our view, despite its apparent early success. Turning to Wall Street, NIO has a strong buy consensus rating based on 9 buys, 1 holds, and 0 sells assigned in the past 3 months. At $59.91, the average NIO price target implies 41.66% upside potential nonetheless. On Wall Street, forecasts call for NIO to report third quarter sales more than doubling to $1.46 billion. We're hoping to see NIO finally turn a profit in the fourth quarter. The company is still probably at least a year away from delivering full-year profits, mind you. But if NIO can at least promise to meet your expectations in the fourth quarter, October's negative delivery surprise should soon be forgotten. Meanwhile, the company remains on track to begin selling its new ET7 luxury sedan in China next year and to begin sales of its ES8 electric SUV in Norway as well, both of which are developments that could help improve sales next year. The firm shared its ambitions for Europe on its earnings call in the first week of November. NIO is already taking orders for its electric SUVs and shipping small batches in Norway, its first stop outside of China. It didn't identify which 5 countries it will enter next year. The young car maker challenges behemoths like Tesla and covets a slice of the luxury car market. Now NIO is exporting that user experience to Europe, home to some of the world's most revered automakers. To be sure, Norway is a small market with a population of 5 million people. NIO still has a long way to go before proving its potential in larger markets like Germany and the United Kingdom. Its success then hinges on whether it could delegate real power to its country managers. It's up to founder William Lee to decide how much control to give to Alexander Schwartz, NIO's first Europe CEO. Orders in Norway had exceeded expectations, and a quarter of the customers who tried its cars ended up placing an order, according to a report from NIO. The company proposes a battery-as-a-service model that allows people to buy its car without a battery and pay for a BaaS subscription later. But the vision requires the setup of a charging network throughout a new country, which is no small feat in the age of COVID. At least early customer feedback in Norway appears positive for the company. It seems that everyone is quite excited about the battery swapping stations and the battery-as-a-service business model, the firm revealed in its second quarter earnings meeting. As of June, NIO had over 40 staff in Norway. In Oslo, its Mugies customer club recently opened. It already operates a design center in Munich, an engineering force in the UK, and an autonomous driving team in San Jose. This is crazy. NIO's development trajectory indicates that the company is on the right track. The startup will also start delivery of the ET7, its 4th production model and also first sedan model, in the first quarter of 2022. The vehicle will be displayed at NIO houses and NIO spaces around the next Spring Festival holiday. Although NIO is facing challenges of chip supply, as some new sensors and chips are used in the ET7, everything seems to be currently proceeding on schedule. The company's CEO revealed that the chip supply at NIO has been much improved from the worst situation in the third quarter. NIO has gradually adapted to the unexpectedly changing situation and is striving to seek proper solutions. As NIO's output scale is relatively smaller than other mature legacy OEMs, the scope of chip tightness for the startup is partially mitigated. Besides, the company is also searching for alternative chips. To ramp up capacity and introduce new products, NIO halted production at some assembly lines at the JAC NIO Advanced Manufacturing Center in October. The company's CEO noted the future new products introduced to the revamped plant and the plant in Hefei Xingshou Smart Electric Vehicle Industrial Park would not affect the manufacturing of existing products. The production at NIO's new plant in the Xingshou EV Industrial Park will commence in the third quarter of 2022. Once NIO's 2 plants are fully operational, the total annual capacity may reach up to 600,000 vehicles based on double shift. NIO also announced the launch of its 75 kilowatt-hour standard range hybrid cell battery on September 23rd, and the models armed with this battery would be handed over to consumers in November. The capacity of the 75 kilowatt-hour battery-powered vehicles is expected to rise to a reasonable level in the first quarter of 2022. We believe NIO is currently progressing quite well, and there's so much potential surrounding it. Well, that's it for today. If you enjoyed the video, don't forget to like, share, and subscribe. Stay safe and see you next time right here on Stacking Stocks.